What's up, guys? I want to do a quick video going over different strategies to use while either day trading, scalping, swing trading, any of the above. Um, as you guys may know, the market is extremely difficult and there is more to it than a lot of people will say there is. There's so many different strategies, and of course, not one is 100% correct, and you really have to keep on figuring out which strategy is the right fit for you. I've tried so many different ones. I've scrolled through thousands of trading view indicators to try to find the right one. And honestly, I still haven't found that perfect one yet, but I found ones that have been really helpful for me. And I've been able to implement both of them and all the different strategies kind of into one. So I'm going to go through a different couple of different strategies to introduce you guys to them, or if they may seem familiar to you. And we're just going to try to find a strategy that fits you best. So, of course, the most basic one is the 5 minute for day trading. So, for the 5 minute strategy, pretty much you want to keep it simple. You want to keep your volume on the bottom and you want your EMAs. The EMAs are very important I would say they're one of the most important indicators you can use while day trading. For my EMAs, I keep it pretty simple. I use the 20 and 100. And that's pretty much all I'm using right here. 100 is it's a good support on pretty big dips, and the 20 EMA is good for tiny dips. And I'm pretty much going long anything above the 20 EMA, and I'm short everything below the 50. What is this one again? Yeah, 100 EMA. So the other indicator that I use on my basic 5 minute chart, and this is one of my main strategies. I use the 5 minute chart mostly, but we'll go over a couple that I use more. And the KST is also the most important indicator that I use for every single one of my trades. And you'll probably notice it if you follow me on Twitter, the different slang that I'll use, whether it be crossing up or crossing down or something like that. So the KST works pretty simple, and if you're familiar with me, you understand that I use this indicator for everything. You're exiting on crosses like this, and you're entering when it's an uptrend, crossing over the zero axis. So you're entering around 429.3, and you're exiting when this red line crosses that black line around 435.44, and you're going long anything above that 20 EMA. We'll look at a couple different tickers with concerning the KST. Same thing with NVIDIA here. As soon as you're seeing it crossing up the zero axis, so when sometimes you can play this and you can kind of jump the gun a little, and you can play this when the black crosses the red below the zero axis, indicating that it is switching to an uptrend. So you're going to take the position. So let's say you do jump the gun, you take the position at 236.71. You're taking out at around 241.12, and of course you're playing everything above that 20 EMA. So we'll go round two right here. If you want to enter it on this cross, that's fine right there. If you want to enter it in at 237.234 and you're exiting, well, let's say you exit right before the after hours at 241.56 or even at resistance. Of course, support resistance trend lines are also very important when it comes to day trading. Just wasn't I was more focusing on indicators on this lesson. Next ticker we'll look at is Apple today, and the KST works perfectly for every ticker. The KST, of course, isn't 100%. We'll go through a couple of examples when it doesn't work, and that's okay. You just have to notice when it's working, when it's not working. So Apple right here, you're going in when this red crosses black or in the zero axis, and you're exiting right here. So you can see why I like to. Sometimes I'll be able to get that little increase right there. So you're entering at around 161.98 and you're exiting at 164.55. Go ahead and look at one more example. We'll look at Microsoft today. And most of these were uptrends, but of course they work perfectly on the downtrends for shorting. So Microsoft today, you're entering around this, let's say 293.8, and you're exiting when this crosses at around 296.36. So we're getting $2-3 plus gains on those. Those really add up when you're trading options. So of course our example is when this strategy does not work, and the nice thing about it is it's easy to tell when this doesn't work. We can walk through some more over here. You're entering right here, you're exiting up here. Days like this though, and you're sitting there trying to time this, and you're saying, okay, red's crossing black, okay, black's crossing up over the red. You have to notice the trend. If you notice a trend something like this and it's in a downtrend all day, and you can see the nice rejection of the 50 EMA, you're shorting everything below that, and you can short pretty much anything below this 20 EMA as well. But if you're noticing a trend like this and you're sitting there and you're trying to time this and you're trying to go long, you keep trying to go long, but it just nothing is really coming out, and you're seeing no volume whatsoever and just a steady downtrend all day, then you have to understand that the indicator isn't going to work. So when it comes to these trying to guess it early, you have to realize you have to see that first little pop of price. So right here, if you're trying to guess this and you see a little bit of an uptrend going, then okay, you can take that position. But if you're seeing something like this and you're seeing no uptrend whatsoever coming, well, then stay away from it, stay on the short side, and don't try to time that reversal. So that about covers everything for the 5-minute strategy. And then we're going to go ahead and switch candle types. Now, the Heikin-Ashi candle is one that I know a lot of people like to use. I'm not a big fan of it unless I'm using the 30-minute, but it can be great for breakouts and breakdowns. So the Heikin-Ashi candle, I'll drop a link below of a description of what exactly it covers, but it's, as you can tell, a lot different than the hollow candles. So Heikin-Ashis can be great for these breakouts when you're getting resistance break. They make it very clear. We get a retest here and breakout. You're getting 30 straight green candles in a row instead of something like this when you're trying to trade this. Let's go back to where we were. And every single red candle, you're second guessing yourself. Well, instead, we get the Heikin-Ashi candles, and they're putting those green candles in the uptrend. You're getting all this green volume, and you're not sitting there second guessing yourself. So if that's something that you struggle with in particular, is you see a red candle and freak out and you want to sell, I would recommend Heikin-Ashi to you because it does simplify things a lot more. However, they can be tricky when finding support and resistance because they're not fully finding the full wick of a candle. So next strategy we're going to look at is the 1 minute. Now the 1 minute, if it's for you, it's for you. It's not for me. I made one trade today using the 1 minute candle. It was on AMD and it was a wedge breakout earlier in the day. And of course, this wedge can be found in the 5 minute too, but it looked a lot clearer to me on the 1 minute. So we'll pull up this wedge on the 1 minute. You can see what I was looking at here. A little ascending wedge kind of pattern. And once we got that full candle body through, I was able to take that breakout and ride that. Anything above that 20 EMA, and I'm taking profits once it dipped below. So we'll look at that candle, and as you can see here on this 1 minute, it's a nice clean breakout on the 1 minute. And then we switch to the 5 minutes. It's a little bit tougher to read. So something like this, you're maybe not timing this correctly because it's really not a clear wedge on this 5 minute. There was a good example with AMD actually yesterday too. A nice wedge forming on the 5 minute, but really on the 1 minute is when it really starts to tell how clear this wedge is and how clear this breakout was. So the 1 minute can be great for those particular things, but if you're someone that gets stressed over everything like me and you start second guessing yourself like crazy, I wouldn't. It slows it down too. Sorry, it's too quick for me, and I want it slowed down. So you can see this clear wedge on the 1 minute chart on AMD leading to a large breakout. And this actually was a perfect example of the Heikin-Ashi candles. And this is exactly the pattern you're looking for. Once you get that clear break of an uptrend and you're above that 9 EMA, you're above, the 20 and the 100 EMA, then you're ready to, then you can take profits on that KST cross. Another important thing is to only use the KST on the 5 minute and the 30 minute charts. So one thing you can do on TradingView, I don't know about Thinkorswim, but you can go to settings on that KST and you can do the time frame. And I have my time frame set at 5 minutes. And that is very important. 1 minute KST is just not going to work as well. So you want 5 minute or 30 minute. Okay, last strategy we're going to use for day trading in particular is the 15-minute strategy. Now, a 15-minute strategy can be very useful, especially if you're one that likes to slow things down a little. It can be great for support and resistance, and we're going to use a couple different indicators for this strategy. So we're going to go remove those drawings, and what we're going to do is we are going to pull up, let's see if I got to pull it up anywhere over here. I think I pulled up my ship chart. No, we do not. Okay. Yep, we do. So for the 15-minute strategy, we'll go ahead and put up SPY. So for 15-minute strategy, you're going to pull up some EMAs. You're going to want to pull up the 5 and the 8 EMA, and then you can even throw in, I think I threw in the 15 in here. Okay, so I got the 5, 8, and the 15 EMA. And pretty much you're shorting everything below these EMAs, and these are going to act as great resistance, and you're going long on everything above. So you can see an obvious trend here on SPY over the past couple of days, and you're pretty much going long. Whenever it comes down to these EMAs, you're adding more. And these work great when there's a trend. Now, when there's no trend, these don't work great. So when you got choppiness on something like, let's pull up AMD today, see if we can get something going here. So when you get choppiness up here, it's not as great. but it is great when there's a trend. And of course, you're going to have your KST right here, which on the 15-minute, they still work great. They might even work better because you're zoomed out a little bit more. So we got a break right here. You're entering and you're exiting probably this red candle when it's dipping below this AMA, and you're also getting a KST cross. Same thing right here, entering right here. Once you get that cross of that zero axis and you're exiting maybe even up here, somewhere into the market close. Now on the short side works the same way. These act as great resistance. And you can see here you're shorting it pretty much every pop on a downtrend. And as that KST can't fully recover and it's in a downtrend all day, that's a great shorting opportunity. So, a little review of what we've gone over. We've gone over the 5-minute, the 1-minute, and the 15-minute. We've gone over the Heikin Ashi versus the hollow candle and the KST and different EMA strategies to use. Overall, I would definitely suggest sticking with your 5-minute and the KST and adding in some of that 15-minute. 15-minute is great for recognizing trend. It's great for volume. You see on the 5-minute, its volume's kind of everywhere. You get a red volume there, you get a green volume bar on the next 5-minute candle. But on the 15-minute, you're really starting to recognize trend with the volume, and you're able to see when you have this many green candle bars in a row, you're gonna realize, okay, well, tomorrow's probably gonna be pretty bullish then. So we'll go ahead and pull up SPY. But to conclude, there is no right strategy. You're going to have to do a lot of practice on finding the best strategy that works for you and combine them, and you'll be able to figure out at some point, and it'll click. So that's all I got for you guys today. I hope you guys learned something in this video. Thank you guys, and have a great day.